Good afternoon, and welcome to another edition of the Next Level Advisor. It's exciting for us to bring on a former guest that we've had and really talking about kind of what is happening in the marketplace. And I'm very pleased to have two guests today. One is actually Steve Sussel. He's Managing Director with Marshall & Stevens and also MS Capital. And I also have Mike Sorenson, our very own, who is actually a Director of Institutional Relationships. So Mike and Steve, welcome to this afternoon's Next Level Advisor. Great to have you guys.
Thanks, Ed. Great to be here.
Thank you.
So let's just dive into it, guys. I think and for this afternoon is, Steve, we've had you on talking about Marshall & Stevens, business valuation, kind of the connection with that as a necessary component in planning for estate planning. But I thought just to start off is, we're sitting here, it's October the 1st. It's crazy to imagine that we're sitting here at the end of Q4 of 2024, and we've been talking about 2025 and kind of something that's happening in 2026. But I think it would be really important for our listeners to kind of get an update. What is going on in the market? What is happening with probably some recent rulings with Connelly versus Supreme Court, indication of values, talking about discount with companies. Give us the landscape of what's going on with business owners today and why it's so important that as we look at what the trends have been, why advisors really need to begin looking to take action here. So Steve, welcome, and it's all yours right now. Give me an update here, my friend.
Thanks, Ed. And it's a great question because, we've been talking kind of the general concept and said, oh yeah, down the road, 2026 is right around the corner. Well, the reality is it's almost here. I mean, we're coming up to the 12-month mark, and people have started to realize that, oh my God, this is real. It's really going to happen. And that we need to pay attention. We've seen a huge uptick in the number of valuations we're doing, fair market value, sort of estate and gift type of valuations for people who are looking to determine the value of their assets so they can make a plan. And really, that has been the step that, that's surging at this point. People understand that there's that it is going to happen. There's going to be a 50% reduction in the exemption come 15 months from now. There's actually a proposal out there from one of the senators to actually take the exemption down to $3.5 million from $7 million. I'm not sure that's going to happen, but still, the point here is that there's no great impetus to either leave it at 14 or raise it back up to roughly the $14 million that it will be for 2025. Somewhere between 13.6 and 14 million-ish will be the exemption for next year. But the fact is that people are starting to realize we need to pay attention to it. For those people that are doing stuff now, that's really great because you can spread your activity out over 2 tax years. I mean, you have the 24 tax year you can use, and the 25 tax year you can use. Come next year, okay, you got to do it all in 1 tax year. And at the same time, as we slowly march down toward the summertime, toward July 1st, there's going to become more of an urgency. And by the time we hit July 1st, it's like, oh my God, it becomes an emergency. It's no longer a planned exercise that we know what we want to do. Let's do this in a clean, methodical manner where we're not racing to get it done. By waiting till the 6 months left in 2025, there are going to be a ton of people who have waited too long or waited long enough that it's just going to the need, the work level, the demand on the professionals that actually do it is going to be tremendous. And, it's going to be a race to see if you can get it done in time. And so those people, there are a lot of smart people out there now who are doing the work now to prep and get themselves in a position to be able to do what they need to do.
Steve, it's such it's interesting because what is imminent is that change is the sunset will in fact sunset. It's going to happen. So, and now you're even sharing that there's actually potential legislation coming in to be able to even reduce it further. So what we do know is that change will take place. It's going to be reduced. We don't know exactly to what point.
Yep.
I think the other point that you're bringing on here too, that we're also hearing from major law firms, we're hearing it from some of our advisors. And Mike, I'm going to bring it out to you because I know you're interfacing with a lot of advisors today. But I think that Steve, one of the things is concerning. What you just said is kind of like we're moving into right now, we're in a period of urgency, but come July 1st of next year, we're in a period of like emergency. And you talked about the professionals, and I'm hearing this from law firms and now yourself, kind of in a place where we're saying there's only so much you can do from a planning perspective based on the volume of work that's coming into you as a professional in this area. That will be manageable. You want to talk a little bit about kind of, there's a lot coming in. So maybe talk a little about what's coming in, what are you seeing, and to the extent that it's going to be a tall order for you to manage all the inquiries and the planning that would be necessary. Can you talk a little bit about that?
Really the key here is that, we're going to get to a point. What people have to understand is this is something that has to be done in the calendar year that you do it. Some things where, okay, I'm going to file my taxes and that's all great. I'll put my extension in and okay, businesses file, whether it's March 15th or individuals April 15th, and then they hit their extension. Everything has to be done and completed, and all your gifting or transfers or putting into trusts or whatever it is, December 31st. This is not where there's an extension involved. So what's coming in is a lot of people who are asking for formal valuations, and those formal valuations, number one, helps them understand the value of their asset, which is important because, the value of the asset, which could be a business, it could be real estate, could be whatever it is, the value of the asset, you add all your assets up, and that's what your estate is. It's not just your business, it's your property, it's your retirement plan, it's your money you put in on the side for a rainy day, it's your boat, it's your artwork, whatever it is, that all goes into what your estate is. So you may have lots of stuff outside your business, but your business may be worth a tremendous amount. You need to be able to plan for that and figure that out. Yeah. And that's where the valuation comes in as a first step to figure out exactly what the value of the asset is and the value of the estate as a whole. And then when you are transferring it in whatever manner you do, again, whether it's gifting or you bring in a trust or selling it, whatever, if you're selling a minority position or gifting a minority position, you are doing discounting. And when you do a formal valuation, you're doing what's called a discount study to justify the discounts, because that's important, because the IRS isn't going to just say, oh, yeah, you're taking a discount of 40%. Well, why is that the case? Well, you got to be able to justify it. Yeah. And that's the type of work we're doing. And so people are coming in and saying, okay, let's do a full formal valuation to understand what the business is worth. And then let's do a discount study to discount it down to the lowest common denominator, 1 share, 1%, whatever you need. And that allows you then to use that same valuation for gifting purposes. It's, there's a lot of that going on right now. And the lawyers need that in order to do the appropriate documentation. You guys, the financial advisors needed to do the appropriate financial recommendations, whether it's insurance or whatever. There are a lot of different things that go into that arise out of determining what the value of the asset is.
Yeah, Steve, it's really interesting because a lot of times what you'll hear, well, my estate's not that big, but you were very poignant on going through the aggregation of personal property, their retirement accounts, and then there's someone's a business owner. You kind of puts it all together, and it's where you think you may be sitting at $1 million or $2 million, kind of put all those things, you aggregate all that together, and next thing you know, you're talking about several multiples of that what you originally thought is the size of your estate. So this is not a thing that's necessarily for the rich and famous. I mean, this application of this is like real life.
It's funny because, we all have these questionnaires, and you guys have questionnaires that say, okay, list the assets, your financial planning questionnaire. And they're asked to list the assets, and people kind of laugh and say, oh, yeah, let me put my home. And oh, yeah, I got a couple things in personal property. Well, guess what? Those are real assets. These are not items that get glossed over and are ignored. Sure, the little stuff can go by the wayside probably, but you have a house, maybe you have a vacation house, all of a sudden that adds up. And then on top of that, again, those dishes and silverware that came down from grandma or great grandma, all of a sudden the price of silver is a lot higher than it was a few years ago. And instead of oh yeah, it's worth 10 or 15,000, well, it's worth 100 or 150,000.
Yeah.
I mean, again, you can exaggerate or whatever, but it's that little stuff that really adds up, that picture that somebody picked up, or these are all things that need to be taken into consideration, including your retirement plan.
Yeah. And we're going to get into the retirement plan in a minute here. I know in some contexts, as we're looking at various structures in the company, but I kind of want to bring it over to Mike. Mike, I know you're front and center. You're working with many financial institutions and many advisors. And just curious to hear from you, what are you hearing from advisors per se? And then how to advise, we've got this, and Steve and Marshall and Steve is just a tremendous value add for our relationships and really providing that necessary expertise as we've been speaking to. Can you talk about, Mike, what you're hearing from advisors, their state of awareness of what's going on? Plus, and then how do you connect the dots? What is your role in kind of connecting with Steve and the leadership team around Marshall Stevens? So,
Sure.
Mike,
Thank you. So, first, to the question on what I'm seeing today, I'm seeing a tremendous increase in initial dialogue around these subjects. It's been maybe within the last couple of months, I've seen a real uptick in terms of how many conversations we're having. And I guess in the beginning, you're doing, basic discovery, around the client and what they're looking to accomplish. But at the end of the day, it's remarkable. We've been talking about this now for a year and a half consistently, and it's remarkable now how all of a sudden it's starting to become real, right? So I would say that my daily interaction is far greater today than it was, let's say two and a half months ago. Mentioned the relationship with Marshall Stevens, it's invaluable for us. When you get down to the fact pattern that you're given, and let's say in this particular situation that there's a family-owned business or there's a business that's involved, it's not a simple process to go through and do some type of evaluation. In addition to that, too, what you need is someone that's going to stand up to the IRS, right? So back of the napkin type of calculations just don't work. So I feel fortunate that I have someone that once I get a particular fact pattern in front of me, I'm able to take it to Steve or his team, have a discussion on the front end about what I'm seeing, get their feedback, and then begin the process more specifically, especially as it relates to working, around a business, and then being able to gather that data and begin the process. The process is actually quite simple. Once we're able to go through and get that data, get it over to Steve's team, they're able to do their calculation of value that they do for us, which, when we tell people that this is a service that's provided for free, they kind of scratch their head, right? And so, but it definitely gives us a starting point, right, on where we're going to go next. So that relationship, it's again, as I said, it's invaluable not only for me but for everyone within Pinnacle that works with Steve and his team. So definitely, activity is ramping up, and I expect it to continue, through the end of next year.
And let me just add one important point to clarify one point that Mike just said, or really build off a point he just said. Formal valuations are needed when you have a decent size asset. That's what the IRS wants to see. If you're looking at something that's small or whatever, that's fine. That's not a big deal. But if you have a reasonable size asset, $3, $4, $5 million type of business, the IRS is going to expect a formal valuation. And really, when you file a gift tax return, if you're gifting or whatever, they're going to need that valuation stapled to the back of the return that acknowledges that a professional who is qualified has done a valuation and is defending that valuation and doing the discount for the discounting and everything. That's really important, and that really keeps everybody out of trouble. I hate to say it, down the road, because the IRS is going to audit a certain number of these. And really, the larger the entity, the larger the questions, the more scrutiny it's going to get. A full formal valuation helps a lot to alleviate that and sort of, move it beyond that point.
Sure, and make sure that everything's properly in order to do that. Go ahead, Mike. Yeah.
Yeah, that's one other thing. I mean, Connelly is a great example of what Steve's talking about. If I'm not mistaken, Connelly, they had a very informal process of actually valuing the company. They didn't do a formal valuation of the company itself when they initially did the buy sell, right? So it's integral to the process and making sure that you're rock solid, right, in terms of what you're claiming, right, and setting forth or putting things in motion. So
that's and Mike, I want to make sure that I heard you correctly, but I think the data gathering component, you're instrumental in just trying to connect the dots here for our audience. You're working directly with the advisors and
yes,
and capturing the data gathering with them, and then kind of then shepherding that, if you will, over to Steve and his leadership team to get them what they need, so that you can come back to the advisor potentially with a recommendation or an indication of, again, there's you're involved in that journey. Am I correct? Did I hear that correctly?
Yeah, I mean from start to finish. And so, as the example, once we get to the point of actually gathering the appropriate data to do the calculation of value, I'm working, hand in glove with the advisor. Look, the whole idea here is that we're not putting someone on an island, right, doing something that's not common or they're not doing every day.
Mm-hmm.
Right. So the whole idea here is to get the appropriate information together in a timely fashion for them. Right. And then once we get it to Marshall and Stevens, the next step generally is going to be where I'm coordinating a call with Steve or someone on his team to sit down and have the discussion around that calculation of value with the advisor, which is very unusual. And so it's an absolute benefit to have that.
Excellent. So I want to shift a little bit here, guys, gentlemen, because interesting data gathering. Steve, Mike is working in collaboration with you, putting that together, and then we're talking about estate, the implications of a proper valuation, and citing of the Connelly ruling versus Supreme Court, and kind of some of the dynamics there, estate, wealth transfer, and to bring in another topic here, which is thrown around quite a bit. Is this term ESOP. So the notion of ESOP planning. And Steve, maybe try to tackle that ESOP, wealth transfer, estate planning. Kind of first maybe explain what an ESOP is and why is that a strategy or consideration of planning opportunity as it relates to business owners. Maybe kind of bring that up because I think it'll bring it full circle, estate, wealth transfer, ESOP, kind of putting, and of course, making sure that everything is properly evaluated. Go ahead, Steve.
Right. And ESOP is short for Employee Stock Ownership Plan. And ESOPs have been around since the mid 70s and have been a great tool for a lot of companies and business owners for a long time. There are thousands of ESOPs out there. ESOPs are qualified plans. It's very unique. They're actually kissing cousins to a 401k. So really the interesting thing here is that an ESOP is an ERISA governed plan that, normal qualified plan rules pretty much apply to. The first few exceptions, that's how the ESOPs were created. But really, ESOPs are wonderful. They, as the name says, it kind of is pushed toward being used, or one of the benefits is that it acts as a retirement bonus for employees. The way it's set up, it's a qualified plan. When they leave the plan, they can roll their assets just like a 401k into their IRA, and there's no tax event for them, and then they get taxed when money eventually comes out of their IRA. So from an employee perspective, they look at it as a benefit. However, ESOPs are very much a tool of creating liquidity for the stock of privately owned stock. And for businesses that may not either want to sell to a large corporation or a private equity firm, or maybe can't and are of a certain size, an ESOP is a wonderful avenue to sell stock and get your money out of the company. The nice thing about an ESOP is, other than being an S Corp or C Corp, there's really no limitation on the size that a plan can be. Really, the limitations become the cost of implementation, which is a whole different conversation we have another time. But really, if you are a privately held business and you are above $5, $6, $7 million in value, you are a candidate to be an ESOP if that's something you choose. And It is another avenue for you to get your money out of the business. Sure, there are other avenues. You can sell your business. You can transfer to a family member, maybe a generational transfer. Maybe there's key employees that want to take over. There are a variety of ways. ESOP, there are a variety of ways to transfer business, but an ESOP really does allow you to maintain operational control if you're not looking to sell, 100% of the business. It's a very good underrated planning tool for business owners.
Are you seeing a lot of that now in 2024? Is it pretty consistent, Steve? And
there's a huge surge in the number of the interest for ESOPs. A lot of people are turned off by selling to private equity shops. I mean, some of the larger companies, but also some of the smaller ones. People need to find ways to get their money out of the business. There's not always going to be a buyer out there. You may not want the buyer. You may not be interested in what the buyer's offering. Keep in mind the nice thing about an ESOP is the valuation standard is fair market value. Fair market value is the key IRS valuation methodology, and for gift and estate. So when you are doing a valuation for gift and estate purposes, that valuation can also be used for thinking about, can I do an ESOP? Because it's the same standard for both, and that's a huge benefit. But the fact is that there's a surge in interest. ESOPs come in all different shapes and sizes. I mean, for people in Florida and the Southeast, everybody's been into a Publix grocery store. Publix is one of the most successful ESOPs in the country. The ESOP owns about 64% of the business or so, last I heard. And, you have other companies that are small mom and pop businesses that are $15 or $20 million businesses that are ESOPs as well. I mean, there are a lot of different businesses out there, different shapes and sizes, that have used ESOPs to create liquidity, to transition the business to the next generation, to do a lot of good things.
I think it's really interesting. I think, Steve, for our audience who have heard you, obviously Marshall and Stevens business, it's a business valuation firm, but you're much more than that. And I think the reason I want to bring this in is because things that I know that I'm hearing, and I think our audience is hearing, is you're talking about estate planning. You're talking about wealth transfer. You're talking about, I'm hearing you talking about retirement elements here. So you're talking about liquidity events and how to create that in the most favorable way. So I think what's really important here is when we look at very onset, the beginning of all things is really making sure your assets are valued properly. And in essence, that's what you're talking about. And then how you transfer that or successfully do the right planning, that's why the season right now is so important. And that's where ESOPs can be a very important tool or planning strategy for our audience to connect with. Am I reading you correctly on that? Just kind of
100% of this. There's, valuation is the first step in all this stuff, and building off of valuation are all these strategies. And once you understand the value of your asset, you can then, do you want to do an ESOP? Do you need other planning? Do you want to do a trust? Do you want a gift? It's all out there. It all facilitates getting stuff done correctly.
So, gentlemen, let me. I'm going to ask you. There's probably a question I have not asked, but before we part here, is there one thing that you want to share with the audience right now? Mike, I'll go with you, and Steve, I'll have you close it. Mike, is there one thing that you think that is really front of mind right now that you would like the audience to know, something for them to think about?
Yeah, I think that when we hear the term estate planning, I think that people immediately go to the explanation of an ultra high net worth person, right? With the sunset provision factoring in, I think that people have to be more realistic about the effects that are going to take place because of this. And I know a lot of my conversations, I like to use the word legacy as much as I do estate planning, simply because I think people close off because maybe the person isn't worth $25 or $30 million. This planning is as important for someone who is, who's worth $1.5 million as it is someone who's worth 25, 30, 40, $50 million. Right. So just try to get people to focus on the importance of just fundamental wealth transfer planning. And that kind of dovetails into what we're talking about now because of business ownership or things of that nature. So that's one thing that I think is extremely important.
Thank you, Mike. That's so important. And Steve, what would be the one thing that you want our audience to hear?
I think Mike's 100% right. I mean,
absolutely.
The time is now. It is early. It is time to have a discussion, to talk to your advisor, to figure out if you're going to do something. If you're not going to do something, fine. Okay, that's your choice. But if you think you would like to take advantage of the rules and the regulations as they are now that aren't going to be seen for a while and have huge tax implications, you need to begin to have a conversation immediately with your advisors to begin the process of taking advantage of it. Whether it's valuation, whether it's any other strategy here, you're running out of time to do it in an orderly manner, and that's something that not doing it in an orderly manner is going to add huge stress and cost to whatever you're looking to do, and that's not something that's optimal.
Steve, thank you. Mike, thank you for your comments. Gentlemen, it's a pleasure to have you. Steve, again, I know we'll have more episodes. Mike, I'd like to welcome you back as well, and I think it's just as we close here with the audience, just to let you know, you've got Mike Sorenson here that is there to work with you, step into this, and to do the data gathering with you, and then bringing in kind of the knowledge and expertise that you have with Marshall and Stevens with Steve Sussel. Gentlemen, thank you so much. Appreciate your time. And again, we look forward to connecting with you in the very near future.
Thanks Ed. This was great. Thanks, Mike.